Welcome to TradeTheMBI.com. This is John. This report is for the 31st of October. Well, again, as I was pointing out, the market's going to be in a little bit of a fit here with only a week to go to the election and so much uncertainty, new polls coming out every day, the fluctuations, but pretty straightforward here. We're between the 176% of the ABM yellow. Clearly it's positive side, but we dipped back below it again, and that's been trailing off since then. And we've seen the slow decay. We had the magenta moving back up above 25, which was healthy, but it started to dip back below yesterday. And once it did that, now you've reached a point where even in this, trail off, you've got very low short interest, but not a whole lot of buying interest. And this is just people wanting to stay on the sidelines with the uncertainty growing. So I think you're just going to see more of that until we get finalization with the election. It's still near the highs, so this isn't exactly a trauma situation, but definitely negative from a reading standpoint. We kind of expected that going into the end of the month here as, they transition and clear the books and get ready for the next phase of things. We have a DOC spread, which is cyan on NASDAQ here, leading. Interesting to note, though, the NASDAQ, from an MBI reading standpoint, stronger than the S&P, but of course you had some negative readings coming out of earnings, even though they're beating across the board. Their AI dream is starting to look a little bit further off than they had hoped. The sustainability of some of those growth projections, they're always wrong, but it's the hype, and the hype always moves things, and then you come back to a little bit of reality, and then they recalibrate from there. From a treasury standpoint, still back and forth, a little bit of an improvement, but at the end of the day, rates have shifted significantly against where the Fed direction is going, and it's just the market saying, hey, we need a higher yield in order to justify being in bonds of any kind. Doesn't make any sense given what the inflation rate is, and we can see that they may, with the numbers that they produce, show a net result that isn't as accelerated, but it's not changing the fact that there's still inflation. Oil pushing back up 38% level here, so we could be in for the next rise of oil going into the second half of things. Again, a lot of it depends on international situations, and they still remain precarious, but nothing out of control. So at that particular stage, it's sort of a status quo. Euro bouncing around within its 0 to 23% is still way overvalued, given, and depends on actually who gets elected. So as Harris's odds improve, the euro will improve, and inversely, Trump, because of the tariff talk, would certainly impact the euro dramatically. But again, the indication of all fiat currencies is being, evaluated here in gold as well as in crypto, and you can see gold making new highs. As we push now, we're almost at 28 here. What was the peak on that one? Just over that 28 number. It's still going to continue to rise, particularly if you get any additional inflation. I think they'll probably see a significant skyrocket for either of them, because both of them basically claiming they're going to continue to spend significant amounts of money. Trump views it from a wealth standpoint of the country as a whole, and Harris just thinks that you can just print regardless, if she even thinks about those kinds of things anyway. So from both of them, you're still going to look at pretty significant deficits, at least relative to the talk. Of course, Trump believes that the tariffs would reduce that dramatically, but that remains to be seen. From an ETH standpoint, also pushing up towards its, we're not near highs or anything, but it's going to start to accelerate. And again, with the uncertainty, until that's clarified, you're just going to get this back and forth. But it's pretty clean from a 5-minute chart here. Early on, you had the peaks to the highs, and then we flipped to a negative coming off the MBI weight spike, and that pretty much continued all the way through when there was an attempt to move back to the 50%. MBI weight took over, and we drove down to the bottom. Then, of course, here in post-market, you had the earnings come through, and while like I said, the earnings were good, the projections going forward weren't so great, as well as the increased multiples. So That's the long and the short of it for now. I think we're going to get a lot more of this increase in volatility here, as particularly as we get into next week. So look for that. Of course, I'll be sending out indicators a little bit later, so be ready for those. So we'll be all set for November, and it should be an exciting one. It's going to be some dramatic moves like there was, well, the last couple of times. So all exciting stuff. Got to be ready for it. Have a good one. Trade well. Anything relevant, I'll put on the Skype chat. Have a good one.